All right, and we are back for week 2 of Mortgage Market Movers Weekly. Back with better audio, so don't have to suffer through that in the introduction. We had a big week last week. We had Trump talking in the World Economic Forum. We had some pretty big things coming up this week. And in case you don't have the attention span to finish the video, essentially, mortgage interest rates creeped up ever so slightly. However, the 30-year fixed week-over-week mortgage rate dropped from 7.09% to 7.02%. So on a week-to-week basis, they are slowly coming down. Daily basis, creeping up ever so slightly. Really big news this week, so stay tuned to see how that may impact the rates. All right, let's get over to the charts. All right, and we are over at the charts. So I am trying a new charting software. This is Mumu. If you are interested in any kind of investing or trading, let me know. I will get you my referral code. Okay, so we have the U.S. 10-year yield pulled up, and in case you don't remember from last week, the 10-year yield is a really good proxy for mortgage interest rates. This is not what the average 30-year fixed is, though it will tell us if interest rates are climbing up or not. So this is on a daily time frame. From December 6th, they have been climbing up considerably until January 14th. We finally have seen them come down, okay? And they started ticking up just a little bit. They have been coming up, actually, if we go look monthly, they've been coming up since really 2020, when rates were around, like 2.5%, crazy low. Just to show you, like I said, this is not what actual interest rates are. This is just a really good proxy, but this was 0.394, and they're all the way at 4.634. So they've been coming up a good bit. The average interest rate month over month, like I said, for a 30-year fixed is 7.02%. So we really don't want to get above this 5% level. Once we get there, it's possible that we get even higher to where rates were back in 2007. So hopefully they don't get there. And there are some pretty important events coming up this week that will definitely impact the interest rates. So that is something that we need to keep an eye on and talk about. So let's go over to it. Let's see. Okay. Let's start with last week. So last week we had Trump talk at the World Economic Forum in Davos. Pretty big deal. A lot of things that Trump says are going to impact the market like crazy. Anything he tweets, says, just like 2016, here in 2025, a lot of the things that Trump says impacts what goes on economically. As far as the market goes, as far as interest rates go, because there is a tie between the stock market and mortgage interest rates. So Trump said that he would love to see interest rates come down. He also said he would love to see oil come down. Also said that he thinks that he can get Saudi Arabia to give us $1 trillion. So we'll see which of those predictions come true. Not that they're predictions, but we'll see which of those wishes come true, right? So that did give a lot of hope to investors. They liked that a lot. So that helped a little bit on Friday, but then that died down. And like I said, we saw the interest rates creeping up a little bit. Now let's look at, we also had existing home sales. So this is going to be monthly, month over month, of existing residential homes. Not new, but houses that are already built. They are being sold. So we had a previous, so this would be November of 2024, 4.15 million. It was forecasted to be 4.19 million, but in December, it was actually 4.24 million. So a good uptick. So houses are being sold. Let's see, anything else in here? We had unemployment claims, not a big deal. 223, this is weekly. Really not that big of a deal. The job market is actually fairly strong. Employment has been on the rise, which may not be great for interest rates, but it is good for people that want to work, right? So this week, what do we have going on? We have a very, very, very important FOMC meeting on Wednesday, January 29th. That is at 2 o'clock. We have the statement and then a press conference at 2:30. Now, this is a meeting where the Fed is going to discuss what is going on in 2025. They gave a pretty big meeting back in December, and that was for plans for 2025, whether there will be a pause, whether rates will get cut, or whether rates will get hiked. And if we go back to our chart, let's see. It was, let's go to this weekly view. Actually, you know what? No, daily. Let's zoom in. So December 18th, this big green candle, which means that it jumped up. So let's see. The meeting alluded to less rate cuts than anticipated. This shocked the market as the market was expecting 4 rate cuts. However, the Fed was saying that they were expecting only 2 rate cuts in 2025. This led to the 10-year jumping up like crazy. And ever since it's been coming up, like I said, we finally saw it come down, and now we will really see what's going to happen Wednesday. So if the Fed decides that there needs to be a rate hike, expect mortgage interest rates to jump up a lot. The market right now is pricing in about 1 rate cut. So that's what they expect. Anything less than that and a rate hike, that'll really impact the market negatively. And when the market is impacted negatively, you can expect the 10-year yield to jump up. So if 1 rate cut is expected, should hopefully stay around the same, but you really have to read between the lines and see what's going on. So there's this battle right now between Powell, who's the chairman of the Fed, and Trump. Trump, like I said, wants lower interest rates. Of course he does. Everyone wants lower interest rates. But Powell, there's just not a great reason to cut interest rates if inflation's at 2.9% year over year, which it is. They really have a target of 2%, and a rate cut just doesn't make sense. We're trying to get inflation down, so a rate hike makes a lot more sense. Not great for the market, but probably better for the overall economy looking forward. We will see. We will see. How far does Trump's influence really reach? Will he be able to convince Powell and the Fed to cut rates more? That's certainly what he wants, so we will see if that actually happens. We also have pending home sales and more unemployment claims, so we will keep an eye on that and inform you next week what happened, what that's looking like, and how the economy is looking. All right, well, I'm sure I didn't keep this that short, but I am working on trimming down the length of these videos, okay? Let me know if you have any questions, if I threw around too much jargon, if maybe I didn't expound upon something as much as you would have liked, if you'd like me to go over anything else, or maybe just I'm wrong about all of this. I would love to know. Let me know in the comments below. And if you have any home loan questions, whether you'd like to refinance or whether you'd like to purchase a home, definitely reach out to us at mortgagesbylinda.com. Give us a call, shoot us an email, and we will be more than happy to guide you through the home buying or refinancing process. All right? We hope you have a great week, and we will see you next week.